Hello traders. Today we are going to discuss this topic, understand the market through the candlesticks. Here are the key takeaways. Now each candlestick pictures the battle between bulls and bears. Candlesticks are very important. It's a very significant aspect of technical analysis. So we need to understand, to know more about our candlesticks. Now, mastering candlesticks helps you to read the market like a book and tell the story of the market. Now, if you understand how to read candlesticks, the benefits will include: one, you understand the market; two, you will take accurate trades; three, you will minimize your losses; and then it will help you to stay in line with the market trend. Now, but there's a challenge concerning candlesticks. And the challenge is simple. Most teachings on candlesticks complicate the lesson with flowery names and information that confuse and discourage traders. You know, a lot of traders are discouraged from having anything to do with candlesticks because of the way they present them. You know, for instance, when you start hearing such names as shooting star, falling hammer, falling wedge, hanging man, three white soldiers, evening star, three black crows, and so many other names, you know, and even some complicated stories about candlesticks, how they originated from Japan and all that. The idea is not to memorize all these names. But the typical trader, he or she wants to make profits. And that is what we are here for. So the good news is that you don't need to memorize those names for a successful trading career. And that is why this training is very important. You have to take it very seriously. It's an attempt to break it down to a very easy way, very simple way that you will understand candlesticks so as to utilize the knowledge to make profit in your trading. Now, there are only three candlesticks. Regardless of all those names that you are hearing, there are actually three candlesticks that you see on the technical and on the chart. So eventually we'll look at the chart and you will see them. So all those different shapes and sizes that you see on the chart, they actually fall under three categories. One is the strength candlestick. The other one is the control shift. And then we have the indecision candlestick. We're going to look at them in detail shortly. Now, the market is a battle between buyers and sellers. That is what you need to know for you to understand candlesticks better. Just always have it at the back of your mind that that chart you are looking at is a result of the battle between buyers and sellers. You can call it a tug of war. So the technical drawings, the charts you are seeing, actually show you the result of that tug of war. So you look at the candlesticks, will give us an idea of who is winning or who is in control at any time. And you always have to remember that more buying leads to higher prices. If the sellers are winning, you are going to see lower prices. Now, let's look at the strength candlestick. Now, one thing about the strength candlestick is that, one, it has a large body and tiny wicks, or it may even have no wicks at all. Now, whenever you see candlesticks on the chart, strength candlesticks, they usually mean that the market, there's actually a strong buy or strong sell. You know, the buyers are having very strong upper hand, or that the sellers are having very strong upper hand, depending on which strength candlestick that you see. So the bullish candlesticks with no upper wicks and bearish candlesticks with no lower wicks, they are very strong because they mean that they have no resistance in their directions. For instance, if you look at this, is a bullish strength candlestick. The candle opened here and is pushing upward. And you can see that there is no wick. Whenever you see wick, it means rejection. So if you see a straight candlestick with no wick at the top, it suggests very strong buying going on. And if you see a very big bearish strength candlestick with no wick at the bottom, it tells you that selling is very strong. Now, the importance of this information is that whenever you see a strength candle, it means, whenever you see a strength candle in the right context, right? We're going to talk about context shortly. Whenever you see them in the right context, it usually means you should keep trading in line with the direction of the candle and not against it. There may be pullbacks, and as I said, the context matters, but the trade usually continues in the direction of the candle. For instance, look at this charts, the candlesticks that we are seeing. You can see that this a strength candle, the bullish strength candle is pushing up, and then here we have a pullback. What you're saying is that when you see a strong bullish candle, strength candle, it usually suggests that the market is buying. And so the best thing for you to do is to see how you key into trade along with the trend. Of course, there will be a pullback because the market does not just go in a straight line. There has to be a pullback along the way. But by and by, that market will keep pushing in the upward direction if it is a bullish strength candle. If it is a bearish strength candle, there may be a pullback, but it will still keep going lower. So you as a trader will be thinking of how to short the market because you have seen bullish strength candles. Now, the size of the strength candle matters too. So it's not just enough to see the strength candle, but the size matters. For instance, when you keep seeing BB candles and then the size begins to reduce, it's going to tell you that the momentum, the buying momentum, for instance, if it is a series of bullish strength candles, and you see that the sizes of the strength candles are beginning to reduce progressively, it's an indication that the momentum of buying is going down. That maybe the sellers are beginning to have stronger influence in the market. Vice versa for bearish strength candles. So large strength candles equals strong buying or selling, and they are the best for determining future directions. But when you begin to see small strength candles, they reflect weak buying or selling, even though there is no visible resistance. And when you see such in an area of interest, in zones of interest, they will help you to take the proper decision that will make your trading profitable. Now, a very good example of the strength candle is the engulfing candle. We hear about the engulfing candle. The engulfing candle is the one that swallows the previous candles before it. And it shows a takeover of control from buyers or sellers. For instance, look at the charts by the side. We can see small, candles that are bearish candles that are, showing that the sellers are having the upper hand, but you can see that the effect is reducing as the candles are getting smaller. And then suddenly, you see a very huge strength candle, which now swallows all these other ones and even rises above the previous high. So that is what we call the engulfing candle, and it's a very typical example of a strength candle. And when you see an engulfing candle, when the market has been in a sideways movement, is usually an indication that the trend has, it's an impulsive trend, and if the market is moving along the direction of that engulfing candle. Now, the next candle is the control shift candle. Now, the control shift candle, you can see the diagrams on the screen. One typical thing about them is that they usually have a long wick and small body at one end. And whenever you see such candles like these ones that on the screen, you can see a long wick and a small body at one end. Long wick, small body at one end. Long wick, small body at one end. It may have a small, even it may have small wicks at the other end. It doesn't really matter. The main thing is that you have a very long wick at one end and a small body at the other end. So whenever you see control shift candles, it shows a takeover of control or reversal in the market. It means that the buyers are taking control over the sellers and vice versa. Now, the color of the body doesn't really matter. It's actually the wicks that tell the story. So when you see control shift candles, it tells you that the market, there's a takeover of control, from one group to the other. Now, we can have a bullish control shift candlestick, like the one we have on the screen, and we can easily explain it. For instance, the bullish control shift candle, we say that it has a small body at one end and a long tail. Now, looking at this one, you can see that it opened above, and then the sellers were, they were the ones that were in control. So they were pushing this market, they were pushing the market down. They were pushing the market down, and then at a point, here around the area of the circle, the buyers actually took over and started pushing the market upwards. And so we now see that the market eventually closes at this level. And what we now have is what we call a control shift candle. So it means that the bulls have taken over control of this market from the bears. The buyers have taken over control from the sellers. Now look at the other one, the bearish control shift candle. So in the bearish control shift candle, the market opened below, and then the buyers were pushing it up, the bulls were pushing it up, and then when it got to the area of the circle, the sellers took over and started pushing the market down, and then the market closed, the candle closed at this level, thereby producing what we are seeing, long wick and a small body at one end. This is bearish control shift candle. So a very good example of the control shift candle is the one we call the pin bar. It's a typical example, and we can see the example, the diagrams on the chart. Shortly, we are going to look at them on a real chart. Now, the importance of the control shift candlestick. Number one, it is the first indication of who is in control of the market. Secondly, a pin bar, that is an example of the control shift candlestick. When you see it in the right context, shortly we're going to look at context. When you see it in the right context, it indicates impending trend reversal and helps us to anticipate that trend reversal ahead of time. Let's make progress. Now, the next type of candle is the one we call indecision candles. Now, indecision candles suggest that there is no clear control in the market. So, indecision candles are like what we have seen. You usually see a candlestick with wicks at both ends and then a tiny body in the middle. They come in different shapes and sizes, but by and by, you're going to see something like this. Whenever you see this in the markets, it means that there is no clear winner. Both the sellers and the buyers are having, similar effects in the market. So the market is not moving in any particular direction. Remember that the market, the chart you are looking at, is a result of the tug of war between buyers and sellers. So when you see candlesticks with small bodies in the middle and then wicks at both ends, it suggests indecision. It comes with so many names, but whenever you see indecision candle, it represents an equal attempt at buying and selling with no clear winner. So a typical example is the one we call the doji. We'll look at the doji shortly. But as I said before, they come in different shapes and sizes. Sometimes they'll have a small candle body. At other times, the body may be just a tiny line. Sometimes the wicks could be long. At other times, they may be short. But whenever you see a candlestick that has, maybe looking like a cross, a red cross or a long cross or whatever, it is actually an indication of indecision in the market. So the good example of the indecision candle is the one we call doji. Some call it doji. Doji, whenever you see doji on the chart, it represents indecision. Now, one important thing about indecision candles is that most impulsive trends or strength candles are preceded by an indecision candle. We'll look at it shortly. Thus, the indecision candle forms the order block for entry to trade along the trend. So that is when we now talk about context. Because when we are discussing candlesticks, the importance of candlesticks, you cannot take it on its own. The information is not complete. You have to discuss candlesticks based on where it is formed. And for you as a trader, we talk about POIs or points of interest or areas of interest. So whenever you're looking at the chart, the area that matters most to you is the context, the area of interest where you want to take your trade. You will be looking at the candlesticks around that area to see what is happening. The candlesticks will tell you a story. So when you look at in an area where you want to take your trade, which is usually the place we call the order block. The order block is simply a place where the market is, going sideways. And when you see the market that is going sideways or ranging, it's usually an indication that the market is in an accumulation phase and waiting to expand, waiting for the next impulsive move. So, and when you look closely at the area of interest, you're going to see indecision candles, like the one we see on the screen. You can see indecision candles. And then when the market is about to move, you're going to see a strength candle that will push. And usually, before that strength candle, you are going to see an indecision candle. So what we are saying is that when you see a strength candle push out of an area of a consolidation, look closely. You are going to see an indecision candle, close to it. And that indecision candle that is close to that strength candle usually forms the order block. And in the smart money concept in the SMC, we usually know that whenever the market, shows an impulse from another block, the market will eventually trade back into that other block. So what you call other block is usually the indecision candle that eventually gave rise to that strength candle or to the trend, the trending market. So this one is a bearish order flow. And we can see the indecision candle there, and they can see the market trading back to that other block. And then below, we can see an indecision candle next to a bullish strength candle. And we can see that eventually the market will trade back to this zone and will continue trading. So that's what we mean, that most impulsive trends or strength candles are preceded by an indecision candle. Thus, the indecision candle forms the other block for entry in order to trade along the trend. I hope you're receiving value. Now, look at another example of what we are talking about. For instance, if the market breaks out of the range, the indecision candle we can use, out of the range of the indecision candle, we can use the pullback into the indecision candle to enter and keep trading in the new direction. We've said it already. The market breaks out of this range, and we can see the indecision candle there. Now, the market will eventually trade back into the other block, and that is where we will hope to take our trade in order to continue along, to trade along with the trend. Now, and here is, a more detailed version of what I just explained, that the indecision candle in a point of interest, indicates imminent trend reversal. Okay, I've already said that the indecision candle can be used to, determine the other block. Now, the next important thing about the indecision candle is that we can equally use it to, identify an imminent trend reversal. What do I mean by that? Now, you can look at the chart. This market is bearish. It's trading downwards. You can see strength candles, and suddenly the candles start becoming smaller and smaller, and then the market, begins to go sideways to consolidate. If you look at the area of consolidation, you're going to see indecision candles, several indecision candles, which is, because this is an area, this is a point of interest. When we begin to see, all these indecision candles in an area of consolidation, for a market that was trending, either downwards or upwards. In this case, this market is trending downwards. And now we're seeing series of indecision candles. It's an indication that this market, the bearish tendency, the bearish trend has become exhausted, and the market is about to see a trend reversal. Or in other words, the sellers are getting tired and the buyers are gaining upper hand. That is why you're beginning to see lots of indecision candles. And then you can see on the chart that eventually the next thing that followed was a bullish engulfer. And from there, the market started trending upwards. So when you see a market that was moving in a particular direction, and then it begins to go sideways, and then you look into that area of interest, and you see a lot of indecision candles, it will be a sign to you that this market is about to change direction. And for you as a trader, you will begin to anticipate it and prepare for that change in direction. So the indecision candles in a demand zone indicate loss of control among the sellers and an imminent trend reversal to bullish. If we see it in a supply zone, that is at the resistance area, is an indication that the buyers are losing control and that the sellers are getting the upper hand. So the indecision candle indicates loss of control. But what now confirms that change of pattern is when we now begin to see, you see the engulfing candle. So when you see series of indecision candles, it only means that we'll be expecting to see an engulfing candle to confirm trend reversal. And that will now help us to prepare ourselves to enter the market and trade along with the trend. Now, summarizing indecision candles, we said that they show indecision in the market. They can be used for preempting reversals if they form in positions of interest or points of interest. Then they usually form other blocks next to strength candles, which the market will eventually return to. So now that we have learned about these different types of indecision, candlesticks, we talk about strength candles, the indecision candles, and control shift candles. There are important things to consider in analyzing candlesticks because just knowing them is not enough. There are important things we need to consider. So we've considered the nature of the candlesticks. We've talked about the strength candle, the control shift candle, and the indecision candles. But as I said before, the next thing we need to know is the context, the zone where it formed. And then we equally look at the time factor. So if we are looking at, for instance, if we are looking at the chart and then we see a strong bearish trend, for instance, we look at this trend reversal diagram. If you look at the bearish trend on the left, we are going to see, for instance, look at this. There is a control shift candle here. There's a control shift candle here, sorry. But it's in the area of the strong bearish trend. If we look at this and just assume that, okay, I have seen a control shift candle here, so I'm going to enter for a buy. And then you enter the market here, you see that the market will just take you out. Simply because the place you saw it is not going to help you. It's not going to be effective for you because this is a strong bearish trend. It's a strong bearish trend. So the fact that you saw pin bars here will not help you to get a profitable trade. But when you now see them forming in the area of consolidation, where there's an imminent change of trend reversal, then they begin to make, more serious meaning to you. So that is what we mean. The context, the zone where it forms matters a lot. Then the next one is the time factor. We equally consider the time factor. So just we're emphasizing what I said earlier, that the candlestick becomes most relevant when it's formed in the right context, in the point of interest. When it forms, it will tell you who is winning in the battle between the bulls and the bears. So that is what we just said here. Because a lot of traders understand that general knowledge that when we see bullish control shift, we buy. When we see bearish control shift, we sell. But where they formed is very important, the context. So now let's look at a ray chart to show the various candlesticks in the proper context. Let me show you. And then, but before we look at that, let's reiterate once again that to determine who is in charge, while looking at the candlesticks, we should also consider how fast the market is moving when buying or selling. And then based on that, you can build a narrative based on how fast the candle is forming and the types of candles that are forming. This is the time factor. We'll look at it more, shortly. Now look at this. Look at this chart. This is a chart of, it can be any assets, whatever you're trading is all the same. So now, for instance, if you look at this chart, you can see that this market was bearish. And then if you look at the bearish trend, if you look at that bearish trend, you're going to see this is a strength candle. And this is a small indecision candle followed by another strength candle. You can see, and the market is coming down. And then then it started consolidating. Now, if you look at the consolidation, you are going to see indecision candles. You see a form of pin bar here. See indecision candle. You see indecision candle. You see indecision candle, and then another indecision candle. Then, boom, there is an engulfing candle. And the market made a pullback and continued trading in the opposite direction. Now, when we talk about time factor, we are referring to how long it takes the candlesticks to form in the market. For instance, if you look at this chart, from this, the bearish wave to the point of consolidation, it took 5 days for the market to move from the top here to the consolidation area, to the area of demand, to the demand area. It took 5 days, for the market to form these candlesticks. And then it took another 24 hours for the market to remain in the consolidation. And then when the market pushed out, boom, we can see that it took a total of 15 days. 15 days for the market to move from the point of consolidation back to the top, the area of supply. So now looking at this chart and the time factor involved, it gives you the picture that actually the sellers are very strong in this market. The sellers are very strong. That is why you are having this. Okay, now look at this chart. This is another chart. This is a chart of a gold chart, which is a picture of what we've been talking about in the other, all along. You can see this is the supply area. The market is moving, was bearish, moving from this supply area to the demand area below. Now, if you look at the supply area, you see some strength candles, indecision candles, and then there's a control shift candle. In this in the supply area, and then boom, you see a you see a strong candle and the market is pushing downwards. And then we got to this demand area and you can see an indecision candle here and then followed by an engulfing candle and the market started pushing up back to the demand, the supply area. Now, if you look closely, you see that from the supply zone, to the demand zone, it took 6 hours. This is an hour chart of gold. It took 6 hours for the market to move from this supply area to the demand area. And then it took 29 hours for the market to move from the demand area back to the, trade back to the supply area. So what does it begin to tell you? It tells you that the sellers are very seriously in control. They have the upper hand. Imagine how long it took the buyers to push it up. In other words, looking at this chart, you can see that this is a bearish, a bullish correction. It's a correction wave. You can say it took longer for the wave to form, trade back to the supply area. And then from there, the market sold again. And you can see that selling down, because it's no wonder the market had to push down again from the supply area. It took only 17 hours, whereas it took 29 hours to go back to the supply area. There's 17 hours to push it down. So, in other words, looking at the chart and the time factor, it will equally help you to know who is in charge. So, a knowledge of the candlesticks, the type of candlesticks, the context, the areas where they are formed, and the time factor. Well, if you understand those things, I want you to, take time, go through this chart again, and then understand, use it to deepen your knowledge of the candlesticks, and then add it to other things that you used to know about your knowledge of the smart money concept. With this knowledge, I can tell you that you'll be able to take better trades, especially when the market comes to your point of interest. You'll be looking out for the candlesticks, you'll be looking at the context, you'll be looking at the time factor and all that, coupled with the other stuff we used to know, that will help us in trading the the smart money concept. So that is what we mean. But looking at the candlesticks or understanding the story of the candlesticks, the nature of the candlesticks, it will help you to tell the story of the market. So I believe you have received value in this. And so I acknowledge you and I advise you to go through it once again and be able to like and share this knowledge so that more people will get to know it. So thank you for your time.